welcome. It's that time once again, the Patriot Radio News Hour live on this Tuesday, September the 26th. Just flying by 2017. Yeah, almost 75% over. Our toll-free number, 800-951-0592. Of course, the physical delivery of wealth insurance. We've been doing it for over 2 decades right here. The website at allamericangold.com. I'm happy to say yesterday was the biggest online shopping day we've had here in about 9 months. So that was really, really exciting. You can order online. You get all the news, the articles, the videos, the Facebook, the Twitter. We're on YouTube now. Yeah, we got our own YouTube channel, and we're working on getting that into the main page as well. Don't forget about the metals plan, right? We're getting ready for another shipment. If you don't have a way to save, maybe you're self-employed like I am. And you're looking at trying to put some money away, look into the metals program. Just a great way to start accumulating some wealth insurance. And let me tell you, boy, after the stuff I got today, you're going to need it. We had new home sales today. We're going to talk about that. It's ended up just like I told you, right? So we got new home sales. We had consumer confidence. We also had an update from the Federal Reserve itself as to, hey, how have we done? And they went back. They didn't go back 10. They didn't go back 20. They went back 30 years. In the great, you think about really the bulk of the super hyper debt period. Right? When you look at the country as a whole, we didn't really start piling on the debt until after 1971, and then from 71 to 81, the debt went from $400 billion to $1 trillion, and from 81 to today, right, we've tacked on another $20 trillion. But it's not just that debt, right? You look at all the asset prices. The stock market, the bond debt, the cities, the states, the consumer, right, the pension plans and all of that. And the Federal Reserve does a study where they figure out who's getting the money and who isn't. And in that study, and we'll break it down during the next segment, but in that study, the top 1% dominated. Matter of fact, the nation, the majority of the people in the United States are significantly poorer today. And the numbers, the percentages were just astounding. And I knew they'd be big, but I was caught off guard by just how big. And then we're going to talk about the cost. And this report, it just came out. And it has to do with the cost of long-term care. And remember, there's no inflation. We're going to talk about that. And then the $2 an hour auto worker job, if we have enough time, in Mexico. It made the Arizona Republic today. It was in the business section on page 8, talking about how and this is really what we're up against, right? The $2 an hour auto worker in Mexico versus, right, all the plants that we know are shutting down here in the United States. We're going to break all of that down. We've got another. And I really didn't think I could outdo yesterday. I think this special today is going to – it definitely competes with yesterday. I actually think it beats it. And we were selling $20 liberties, at $1 or $2 over spot. Matter of fact, for about, the last 3 or 4 hours we were here, you were buying it for $1 or $2 under spot. We've got something equally as impressive today as well. We'll get to all of those things. I will say the Cardinals were on Monday Night Football, and this is going to be the last time I address it, but I'm done with football. I won't watch another professional football game until this ridiculous antics end. You got to find a better way. If you want to protest, great. I support it. You have the right to do it. If you don't want to stand, if you don't want to come out and stand for, the national anthem, then I don't want to be a part of it. It's just that simple. And it happened again yesterday. All the Cowboys. I saw Jerry Jones on his knee and all that stuff. I'm done with it. I don't understand. When you think about, hey, listen, life's not perfect. I get that, right? And we've got ways to go, right? There's bad apples out there and everything. But where are you going to be more free? Well, and I guess, freedom is slowly slipping away from all of us. But man, I don't understand it. I really, truly don't understand. And like I said, where are they today? Where are all these guys that were taking a knee today? Are they out there? Are they being involved? Are they doing anything? I haven't seen. Now, maybe some of them are. I haven't seen it. But I will just tell you, for me, I'm not buying NFL anything. No more fantasy NFL, right? I'm not doing the fantasy football anymore. I'm not doing the pick'ems anymore. None of it. Done. Till it's over. Patriot Radio News. I just had to get that off my chest. Patriot Radio News Hour. We'll get back to what we do best next. 800-951-0592. Before we get down to it, we've got just a great opportunity. It's the 10-10 special today. In this, you're going to get a $10 Liberty gold piece, and you're going to get 10 silver dimes. Right? The silver dime, that's like 10 loaves of bread. 3 or 4 gallons of milk, right? That $10 gold piece, hey, that's a chicken coop with some chickens in it. That's half a side of beef to feed your family. It's a generator, right? When you're looking at, hey, is it going to be anarchy someday, right? Do I need barterable material? This fits that bill. Then, when you look at what we do best, which is the wealth insurance part of owning gold and silver. In other words, hey, I want as much gold as I can get for the least amount of money. You're going to get the $10 gold piece and the 10 dimes, the 10 silver dimes, for $660. So that's $12, over $12 of melt silver. And you think about that puts that $10 gold piece at $648, which is below spot. So you're looking at spot gold right now is at $1,300. Gold's down 7 at $1,300. So you're going to be able to get a $10 gold piece at roughly $648, right? Which equates to about $12 if you had 2 of them, right? $1,296, about $4 under spot, with $12 of meltable silver. So you get, you get great fractionality, right, in the dimes, and then that $10 gold piece, right? That would be for, if you ever had to use it for bigger things, right, like a generator or chicken coop or a half a side of a cow, things of that nature. But then when you look at what it costs, you're like, man, that's just, I'm buying silver at melt, and I'm buying gold at below spot, all in the same package. $660. It's the 10-10 package. You get the $10 gold piece, the 10 silver dimes, at 800-951-0592. I've only got 80. That's all the 10s that are out there. So once they're gone, they're gone. I've got 80 of them at 800-951-0592. The biggest piece of economic data was new home sales, and really just falling in line with home sales in general. New home sales, unexpectedly, I love how they said, it was unexpected. Apparently they didn't listen here. Fell 3.4%. Now that's big. That's a big number in home sales. It is new home sales, so it's a little smaller of a number, so percentage-wise you can move the needle a little more. But down to the 560,000 annual rate, this was the lowest amount of home sales since December. So it's the lowest sales for the year as far as new home sales. August was the first month now where year over year sales have declined. In other words, from August of last year to August of this year, new home sales are down. They said the unexpected decrease reflected notable declines in sales in the South. And remember, the two housing markets, the big ones, are the South and the West. And then, the Northeast and the Midwest, not as much. New home sales in the West and the Northeast also fell by 2.7%. The South was down 4.7%. New home sales in the Midwest was unchanged. The median sale price also fell, down to $300,000, down 6.2% from July. And now new home sales a year ago was $299,000. Today at $300,000, and so you're seeing a huge decline. They estimated there are 284,000 new homes for sale at the end of August, which is a 6.1% or month supply. Which they say 6 month supply is the ideal number. They're there. Like I said, this isn't a supply problem. The showing did say that home sales under 200,000 have fallen by double digits, percentage-wise. And they did, well, you know what? Builders can't build homes for under 200,000, at least not where people want to live. That's kind of the biggest problem. So we did have that, but the big news, though, that's really driving the market is the tax cuts. We are expecting tomorrow a blueprint from the White House as to what the tax cuts may look, what they hope to look like. And then, of course, they'll have to go to Congress, and we'll end up seeing what we get. They're looking at taking the tax rates. There was 7 brackets down to 3. Taking the top rate, which was 39.6, and bringing it down to 35, and that's kind of undoing one of the Obama tax increases. So the top guys go from 39.6 to 35. The corporate tax rate, they're saying a number around 20%. Now remember, they throw out 35. I've even heard 39. Right now, the publicly traded companies pay a tax rate all in about 27. After all the giveaways and loopholes and all those things. Now they're talking about 20, and they're just saying around 20. They want to see a 15% rate for corporations, but they don't think they're going to get it. Then they're saying that the lowest bracket, which is 10%, is going to go up to 12%. But they're going to double the deduction. So I think when it all and that's out in the wash, it'll really be there may be a few people that are going to pay a little more, but the vast majority, like 90-something% of those people, will also get some form of tax relief, and we're going to increase the amount of people that don't pay federal income tax. And I want to be clear on that. That isn't the payroll tax. It's not that they don't pay any tax. They just won't pay the federal income tax. I have not seen any number as to how much it's going to cost. I don't know that. They haven't released any of that, but that is expected to be out tomorrow. And then, of course, the biggest news of the day had to do with these Federal Reserve's own reports. And I love it when they come out and they produce something that just really reiterates what it is that they're really all about, which is making most people poor. I mean, that's how fiat money really works. So this number really shouldn't be a surprise because we know it's happening. And we had a first-time customer. He was in yesterday, and he was picking up those silver dollars that we ran. And by the way, the last of those are going out today. So anybody that had waited on Morgan and Peace dollars, you've either picked up or you've been shipped yesterday or today. Today we'll have the last of those out. And then we've got some people waiting on 20s. Those will be out tomorrow, and we'll be all caught up. But what he was saying, so he's in here and he was picking up, and he was we were talking about, he's one of those side hustle guys. He's working 2 and 3 jobs, trying to make it all work. And the one thing that we were kind of kidding around but really weren't is, how gradually, and he was talking to me, man, Joe, I'm worried. Right? And I'm thinking, but it feels like the top's getting closer. And, of course, that means, right, when the top gets closer, right, then the bubble bursts and it's going to get ugly again. And I told him, I said, I'm hoping for the gradual decline. And when you think about the last 30 years, and you look at all the stock prices, and you look at all of the prices of homes and cars, and you see what they've done, and, you think about, a new home in 1987 was, I didn't look it up, but I'll guess, 50, 60 grand maybe, right? That's maybe. Right now it's 300, right? A car was maybe, 4 grand, 5 grand. Right now they're 35. Research from the U.S. Central Bank shows the gap in income and wealth. So it's 2 separate studies. One is income, okay, your paycheck. The second part is wealth, how much stuff you got. The gap between the richest and the poorest households, already at historically high levels, continues to widen. So we're already at record highs, right? And it's getting bigger. According to the Fed's latest survey of consumer finances, right? It's actually not even going to be released till tomorrow. The share of income held by the top 1% reached 24%. So when you think about everybody's paycheck, right? So you look at down your street, right? And you look at all your neighbors and their paychecks. You look at the subdivision you live in, all of their paychecks. You go to work, all the people you pass on the freeways, all of their checks, right? I mean, you go through and you take everybody's check. The top 1% take 24% of all the checks, of all the dollars, every week. That's an increase, and they went back to 1988. That is up 41%. It went from 17% to 24%. Not quite a 50% increase, but closing in on 50%. They're making almost 40% more of the money. In 1998, the wealthiest 1% of the people took home 17% of the money every week. Now they take in 24%. That was the good number in this report. Remember, they did two numbers: your paycheck and then what you got. The share of wealth held by the top 1%. So how much stuff you got? How many houses you got? What do you got in your IRA? What do you got in your 401k and your stocks and your mutual funds and all of your annuities, right? You add it all up. Rose to 39%. So let's round up. Let's just call it what it is. The top 1% own 40% of all the stuff in the country. By the way, this one went back to 1989. So, just under 20 years. That is an increase of 30% from 30 years over the last 30 years. Essentially, the top 1% are gaining about 1% a year of everybody's stuff. Won't be long now. They'll have it all. Patriot Radio News Hour. Thank you, Federal Reserve. We'll be right back after the break.
This is the Phyllis Schlafly Report, presenting a daily conservative pro-family perspective since 1983 and continuing the legacy of Phyllis Schlafly. Now, from the Phyllis Schlafly Center Studios, here's Ryan Haidt.
Can Western civilization survive? Does it even still exist? Liberal intellectuals have already retired that term to the proverbial ash heap of history. The riches of our Western heritage are no longer taught in schools, studied in colleges, or cited by our political leaders. The media insists on exaggerated gestures toward diversity and multiculturalism, denigrating the dead white males and the English language, and constantly, but inaccurately, describe the United States as a nation of immigrants. With one powerful speech, however, President Trump has changed the terms and tone of the entire discussion. He has made it not just acceptable, but necessary to speak and act in defense of the Western culture that made America. Trump's historic speech in July in Poland was of the same importance as Winston Churchill's Iron Curtain speech in 1946, marking the beginning of the Cold War, and Ronald Reagan's Tear Down This Wall, which led to America's victory in that war. The fundamental question of our time is whether the West has the will to survive, Trump challenged Europe and America, adding, "Do we have enough respect for our citizens to protect our borders?" The crowd was so enthusiastic for President Trump that one might have thought he was back in the States, leading one of his own campaign rallies. The flag-waving Poles frequently interrupted Trump's speech with cheers and chants. We are confronted by another oppressive ideology, one that seeks to export terrorism and extremism all around the globe, Trump said. America and Europe have suffered one terror attack after another. We're going to get it to stop, Trump pledged to applause. We can have the largest economies and the most lethal weapons anywhere on earth, but if we do not have strong families and strong values, then we will be weak and we will not survive, Trump observed. Our own fight for the West does not begin on the battlefield. It begins with our minds, our wills, and our souls. Trump explained, our freedom, our civilization, and our survival depend on these bonds of history, culture, and memory.
This has been the Phyllis Schlafly Report from Phyllis Schlafly Eagles. When America turns our back on our Christian heritage, we shouldn't be surprised when biblical precepts like honesty, kindness, respect, justice, and freedom are abandoned. At phyllisschlafly.com, we still believe in rights endowed by our Creator. If you agree, find out more at phyllisschlafly.com. Thanks for listening to the Phyllis Schlafly Report.
Welcome back, Patriot Radio News Hour. Our toll-free number, 800-951-0592. So we just sold 12 of the 1010 packages If you just joined us, this is something I can say for certain we've never done. This is the first time in Patriot history we're selling $10 Liberty gold pieces. You get a $10 Liberty gold piece, and you get 10 silver dimes. That's $12+ of meltable silver. So you take $6.60, you get $12. It's actually a little more than $12, but we'll say 12. That puts the $10 gold piece at $648, which means two of them would be $1,296. Spot gold is at $1,300. Actually, it's down $6.70, $1,300.10. That's $4 below spot if you buy two of them. Buying one of them still puts you at $2 under spot. Never in the history that I know of, in the 22 years that we've been doing this, have we sold fractional liberties, and the Indians never, of course, obviously either, any fractional old U.S. minted gold at below spot until today. Now, it's not a lot below, but it's below. So you're going to get 10 silver dimes, which is at melt. You don't buy silver at melt. You're going to get 10 silver dimes at melt, and you're going to get a $10 gold piece at below spot. There's $660, 800-951-0592. We've got two lines open. There's 68 left. At least there was. Wendy's on the phone right now. Make sure you take the time to put it away, because now this is the best of all the world. You get divisible material, right? You have barterable stuff, right? You got the dimes and the $10 gold piece, right? And if it ever really, right, heaven forbid, somehow North Korea put a nuclear bomb in L.A. or whatever happened, a something on the scale of Puerto Rico, where who knows how long it's going to be, where there's no power. With no power, you can't do anything, right? You can't use your credit cards, can't use your debit cards, can't use your phone to pay for stuff. If you have gold and silver, you can survive it. And because of what we're selling it at, now you've also got, not only, because normally when you buy the smaller materials, the incremental materials, you pay a bigger fee, right? You pay more because more labor went into getting it and all that other stuff. That's not the case today. So you get dimes, 10 dimes. You're buying the silver at melt. You're buying the $10 gold piece at below spot. They're $660. So you get all 11 pieces for the $660 at 800-951-0592. That is the toll-free number. Take the time and put them away. I do not have I do have the $10 Liberty online. Unfortunately, I'm not able to do that package. So this package here, you are going to have to call in and order it over the phone. So this is one of the ones you got to do it the old-fashioned way and call the 800 number, 800-951-0592. For those of you that want to use your credit card, it'll be $673 on the credit card. So if you want to use your Visa card, your MasterCard, your Discover card, your Amex card, whatever it may be, at $673. By the way, the Federal Reserve released a bunch of data. The regional branches of the Federal Reserve, so that's, you think about all the Federal Reserve banks, right? You got New York and Atlanta. Out here in the West, it's the San Francisco and all of these regional branches, they release regional economic data. Some of the regional banks issue national economic reports, and some of them don't. It just depends. Each bank has certain things that they do. You know, like the Atlanta Federal Reserve does GDP as an example. Them, and now New York does it with them as well. In the national economic reports, the thing that usually stands out is real U.S. growth, right? So forget the seasonality, forget the MIT Mafia. The Federal Reserve Bank of Chicago, and they have a survey, you may have heard of it, the Chicago Federal National Activity Index, has indicated that the economy slowed again in August. It said that, well, the July report is being revised. Of course, remember they're having an auto sales problem. They said that the August reading came in at a negative 0.31. Far worse than what they were expecting. They were expecting an increase of 0.11. And it came in at a negative 0.31, that's a big number, 0.3% to the downside when you're talking about an economy that's got, somewhere around $19 trillion of GDP growth. That's a big number. Some of it appears to be the impact of Hurricane Harvey, right? And Harvey hit at the end of August. And that only sets up now what they're worried about is if August was already bad, and then Harvey hit at the end of the month, what's going to happen in September when you had still the after effects of Harvey and, of course, Hurricane Irma that hit on Florida? Before getting into what each part of the report showed, the report is weighted by an average of 85 existing monthly indicators, right? So there's 85 different categories that this report tracks. And they do stuff from production and income, employment, unemployment, hours worked, personal consumption and housing data, sales. I mean, a lot of stuff. And they take all of the stuff that makes up this economy, and they have 85 different indicators. We're going to tell you what those 85 indicators showed. Make sure you hurry up and get in on the 10-10 special, the $10 lib and the 10 silver pieces at $6.60. As best guess here, looks like we got 36 packages left on the 10-10. The first time in history that we were selling a fractional $20 Liberty at below spot. But during the break, gold fell like $6. So now it's actually $1 over spot. Sorry. Gold's now at $12.94, which would put, half of that would be $6.47. There's $6.48 is the package. So you're getting a $10 gold Liberty at somewhere around spot, right? From a $2 under to $1 over, and 10 silver dimes at melt, which equates to about $12 on the dimes, and $648 on the $10 Liberty for $660. If you want to put it on your card, it'll be $673 at 800-951-0592. Now, this report is really interesting because remember, just last week at the big press conference meeting of the Federal Reserve, Janet Yellen tried to give the impression that things are getting better. Right? And she's, we could still raise rates in December. I guess that was the big takeaway. And then you find out that the Federal Reserve actually has this data in hand. According to their own research, the 85 different categories that they use to comprise the real health of the economy, 50 of them were negative. Only 35 of them were positive. And what's interesting is that number, that 85, the positive numbers to the negative numbers, has been going the wrong direction all summer long. So during the time where they allegedly said we had 3% GDP growth for the second quarter, their own data was saying the 85 categories, the real numbers, were starting to go the wrong direction. And by August, the numbers of real contributors that are affecting the economy negatively have far surpassed the ones that are positively contributing to the real economy. And yet, you didn't hear that in their speech. What's so funny is this is a Chicago Federal Reserve report. They're the ones that put this together. If you go out to our website today at allamericangold.com, the first Fed Reserve Governor, Neil Kashkari, was out saying, yeah, we're not raising rates. You scroll down a couple of 2-3 articles, you'll see Mr. Evans, who is the Chicago Federal Reserve boss. He's like, yeah, we shouldn't be raising rates. And it really kind of stands to reason, isn't it? He's the one that's in charge of this data. He's like, hey, wait a minute here. There's a pretty clear pattern. Contribution from production-related indicators decreased by 0.36%. And listen, this is before Ford and General Motors started laying people off. Personal consumption and housing-related indicators also made a negative contribution. Right? And again, right, people are broke. Can't afford it. Auto sales are down. Home sales are down, right? There's no way that GDP is growing if both of those categories are down. Employment-related indicators, they were positive, but the positive was 0.05 in August. That was half of what it was in July. Sales, orders, and inventories, and of course, when you throw inventories in there, this is one of those misleading ones. That was positive, but that was just because they had way more stuff. I wish they would break out sales and orders and then have inventories be a separate category, but they don't do it that way. But nonetheless, this was all in hand. And this is kind of what I'm talking about when everybody says it doesn't feel like a 3% economy. When you hear all of these economists, and of course we're going to see about these tax cuts tomorrow. And again, remember, this is the wish list. Why all of these people are out there saying, hey, listen, we're not going to have 3% GDP growth. Because I've got a funny feeling, and I don't know, I don't have the full report, and it's hundreds of pages long, and I don't know that I'm smart enough to figure it out. But is the real numbers, are we negative? I mean, if 50 of the 85 are negative, and I'm just, and I don't have all of the ones that were positive versus all the ones that are negative, but if we're not there, we're awfully close. And you would think that the Federal Reserve, and you're starting to hear it, right? And they're talking about the division, right, and no rate hikes and all of this other stuff. Oh, by the way, well, there you go. Now I know why what happened. So, like I said, over the break, gold fell $6. Janet Yellen's talking. So I don't have the exact verbiage. We'll talk about what she said tomorrow. But according to the headline that I'm seeing, she's talking about inflation. And talking about inflation, I want to share with you what it's going to cost for 1 year to stay in a private long-term care facility. You're not going to believe it. I can't believe it. That's coming next. 800-951-0592. We're back to under spot again. Gold's now down just under $10 here, $1,296.30. Today's special, the 10-10 package, a $10 gold piece, which has been under spot almost all day. Well, for about 5 minutes it wasn't. It may be, it's around that area. The lowest premium over-under spot ever. And 10 silver dimes. So you get a $10 gold piece and 10 silver dimes, the 10-10 package. The silvers at melt. The $10 gold piece at, let's just call it spot. $660 at 800-951-0592. I hope to talk about this again tomorrow as well. Long-term care costs. And I've been telling my mom, she's 73. And a lot of you out there are in my boat, right? You have, your parents are older. And this is one of the things you worry about because you just don't know. I mean, it could be anything. They could fall, a stroke, they got sick. Right now the flu is deadly out there. Long-term care costs are surging again. The most expensive option, a private nursing home room. Okay, I'd like my mom or my dad, right? For me, I'd like my mom to have her own room. May soon top $100,000 a year. And I started, right, I'm like, holy, I won't use the word I use because it's a family radio show. You would need to buy 151 and a half of the specials I'm running today just to pay for 1 year in a private nursing home if you wanted your own room. And it's only getting more expensive. Growing labor expenses and sicker patients. That's the reason, they say, not the Federal Reserve and the devaluation of the dollar, has pushed the median cost of care that includes adult daycare and assisted living communities up by an average of 4.5% this year. And right, that's every year. When you think about it, okay, in 10 years, it's up 45%. Every 20 years, it's pretty much double. It's the second highest increase since 2004. Right? The cost of a home health aid services climbed the most, rising 6%. Private nursing home care now costs more than $97,000 annually. And remember, if you reach the age of 65 and you're a male, you're going to spend the equivalent of 3.7 years, I guess after that you die, in one of these homes. So you're looking at, right, let's just call it what it is. There's $400,000, right? And then the wife, your wife, women, I guess, are healthier. They're only going to be in there for just under 3 years. So, between the two of you, if you got, $750,000, of course, it goes up 4 or 5% a year. So, man. Don't worry, though. Janet Yellen's telling us how great a job she's doing. Get what's left of the 10-10 package, $660 at 800-951-0592. We'll be back tomorrow. Everyone take care. Have a great rest of your Tuesday.